Hey guys, Augustino here. I'm out looking at another property here. It's looks a little different than what you probably see me look at as far as stabilized assets and stabilized multifamily is concerned. It's very different than what we bought over the years. Very different from the developments that we do as well. So this is what's called a single tenant net lease, STNL. All right, so it's one tenant, one building. That's it. Right? You've seen plenty of these before, I'm sure. You drive by them all the time. You probably went to one this morning, actually. If you went to a Starbucks, you went to a Dollar General, Dollar Tree, whatever. Even if you go to a single IHOP or something like that, it's usually single tenant net lease, right? So the interesting thing is this company you see right here, right? This Aldi here, right? They don't actually own the property. They lease the property. That's the cool thing about it. So who owns it? All right, this is a real big question. Investors do. All right, guys like you, guys like me, we own these assets. So it's just not these small properties as well. You could also think of like there's a Target over there. There's a Target. There's a strip center over there. Shopping malls. Those are all owned by private investors. Private companies own those things. They own the building. They own the property. They own all of it. And there's a lease in place that allows the tenant to lease it from them, right? These are places that you have visited possibly on a daily basis, and that you've shopped at, your family shopped at for years, even decades. They've been going to these types of locations. So the cool thing about these deals is that the tenant that's in place, they guarantee the monthly rent, and they're never late. So the corporate or franchisee, they guarantee the lease. All right. So even in the unlikely event that Dollar Tree goes out of business, the leaseholder, meaning us as owners, right, and in the deal, we get paid out before the shareholders do. All right. In the case of a publicly traded company or even a private company for that matter, right? So another thing is, you won't be evicting Applebee's or Dollar General or Aldi anytime soon either, right? Like it's never going to get to that point with these types of companies, with these types of deals. So aside from controlling the deal, or controlling the lease rather, we also own the real estate as well, right? So, and I mentioned a second ago about how aside from the lease that you're controlling, you're also getting the real estate. So that means that all the tax benefits related to the asset itself all roll back up to us, right? So what we did was we set up a fund to buy these types of deals, all right? And the whole point of it was to get us a steady, predictable monthly cash flow. This differs greatly from the multifamily assets we bought over the years, where that's typically paid out in quarters. This is a monthly type of deal, but setting up a fund allows us to spread the capital across multiple industries, multiple businesses, in many locations, and reducing overall risk even further than the risk that's already reduced now, just because of the nature of how these deals work. So, but here's the real crux of why we've been doing this in the first place. You need to prepare yourself for to get that reliable, predictable monthly cash flow. Okay, the Fed is going to probably raise rates again end of this month. All right, we're in September right now. This is going to send the markets into a frenzy, just like it did the last time. All right. Now, I'm the fortune teller, but this could tip the U.S. into a recession. And I'm not the only one that's saying this. Getting steady, predictable, passive income is going to be very, very important for you and your family on a go-forward basis. These are things that I didn't know when I was working in corporate. I had, the big-time job, doing all that stuff. Working at the C level, I didn't know any of this stuff. No one told me, right? So I'm here to tell you that these are options that everyday investors can get in on and get that predictable income. So even at the C level, you're at risk, So what you're trying to do is reduce private or personal risk, and this is a good way to do it. So 2020, if any good came out of it, it was a very good test for what sectors are most resilient. Now, net lease and multifamily, they stayed in business, okay? So now it's time to double down where there's still opportunities out there. So we're focused more on net lease and development these days because I think that multifamily, stabilized multifamily, is a little frothy, and I think that we're best serving our investors that to get into the net lease and of course development too. So as a guy that's seen many recessions, I can tell you that we're preparing ourselves and our investors to weather the storm. So if you want to know more about how this works, click the link in the description and book a call. I'm happy to jump on a call, share more about what we're doing and how we can help you. So making money is an action, keeping money is a behavior, growing money is knowledge. So keep your knowledge up, book a call. Okay, I think it's only, if anything, you're just going to learn more, a little bit more about how this kind of stuff works. Okay, be bulletproof, guys. I'll talk to you soon.